Hello, everybody. My name is Aayush, and I'll be the moderator for the panel today. The topic here is VC investment in Asia. Before we get into that, maybe I can just introduce Leon from Global Founders Fund, Sebastian from Kejora Ventures, and Albert from Burda Principal Investments are here with us today to talk about investments in Southeast Asia. So I guess one of the first questions that I had is there adequate funding available for companies at different stages in Asia, and in particularly in Southeast Asia? Just to extend that question, for example, is there an abundance of seed and Series A investment, and there's a dearth of more growth type investment, or do we feel that there is enough investment or investors available at different stages for all sorts of companies in Southeast Asia? So maybe we'll go around the panel.
Sure. So in the region, we see a natural development. When I look at Indonesia specifically here in that case, we've been seeing 3 or 4 years ago the development of a couple of seed investors where the crunch has been from seed to Series A. Whereas now, natural with the development of the local ecosystem, the crunch rather comes from the Series A to Series B / even Series B to Series C stage. So coming to your question, we see the ecosystem developing in a way that there's more funding available, but the more mature a company becomes, the less capital is available in the space itself.
Yeah, so I agree with Leon. So when we started in Indonesia back then, 2 years ago, there was like maybe 5 VCs, and now they're probably around 20. And they always started from small because also they need to raise a certain amount of funding, and then they can back the smaller companies. So actually, we still feel there's a bit gap in the Series B and C, but the smaller VCs are now growing also. So the last year, maybe a Series B would be a chip-in of several Series A kind of VCs. Now there are more early stage VCs growing to a B kind of type. There are new players coming that's focusing on Series B, and even the bigger guys, the private equity, is starting to making smaller investments.
Yeah, I think just to broadly echo what these guys have been saying, I think there is definitely a lot more capital available at the seed to Series A stage. Once you get past that stage, I think funds that are focusing on tech investments in this region, it become a bit more scarce. But that said, I think there is actually capital available even at the later stages for the right companies. It's just it may come from somewhat non-traditional sources for in terms of the types of funds that would typically be purely investing in tech.
So a follow-up question on that is, what options are available for companies who are trying to raise, say, $30 million today? Who should they go to, or who do they go to today? Because that's a question that a number of my clients have asked me, and there's not an obvious answer for that. Because as you guys rightly said, that there are no specific Series B, Series C type investors who would write $15-20 million of checks, and so you would have guys who would be writing $3, $4, $5 million, or private equities, as you said, trying to write a $30 million. But if you're raising a $30 million round, then it kind of falls in the middle. So who do you go to in that case?
So if you look at some of our companies recently that raised Series B or C, it's a mix of corporate ventures also that chip in. But as mentioned, by now our experience is that even it's led by a corporate venture or a corporate, it's normally also followed by several other players, so we can reach a significant amount of $20-30 million.
Yeah, but next to a syndicate investment of local corporates, forward-looking, what we also strongly believe in is looking at Chinese VCs. Yeah, in China, we definitely observe an oversupply of capital in the market, and more Chinese VCs changing their fund structure in the way of going away from renminbi funds only to also setting up a US dollar fund with the specific aim of going into Southeast Asia and supporting these companies at a Series B, Series C stage, which on a valuation level come rather close to a Series A round in China per se. I guess going forward, there will be multiple sources of capital available at this stage, at least what we believe in.
I also feel it, right? I mean, when I was in US like 2 years, 3 years ago, nobody cares about Southeast Asia, but now a lot of US VCs, Chinese VCs are like on a weekly basis in this region. So I think they become in the radar, and those guys are ready to chip in $20-30 million.
I think the one other, in addition to like the local, the corporates, is actually local conglomerates. Seems to be a source of capital in markets like I think Indonesia, Thailand a bit more these days, maybe Singapore, Malaysia. That seems to be another source that is there for the right company, right? I think, as you pointed out, there's not like a very visible source that will be looking to invest constantly in tech at that stage, but across a few different sources of capital. I think companies do have to be a bit more creative in how they raise that type of round right now.
Got it. Thank you. One question, which goes on to talking about risk aversion of investors. Do you think that there is some amount of risk aversion in the investor community in Southeast Asia, at least, when it comes to funding new type of ideas or giving a large amount of money to a particular corporate? If you think about all the large fundings that have been done in Asia, it has been concentrated, or in Southeast Asia at least, it has been concentrated in 3-4 names that we can count on one hand. And most number of startups that have come are in the consumer internet space. So I feel that the funding required to support a new kind of idea, maybe something on the enterprise side, maybe something on the SME or MME side, just doesn't exist, or VCs are a little bit more risk averse when it comes to supporting something which has not been proven.
Yeah, that certainly is the case. We see more risk aversion happening on both the enterprise side, but also on supporting kind of SME solutions. But the reason are quite different. What we see on the enterprise side is just that we see companies being funded in the valley with similar enterprise solutions, but with always more money in the bank to provide a superior product and superior customer experience to the enterprises they work together with. So we just see a lack of competitive ability of, say, local or regional enterprise solutions to really compete with the US similar model. If the US were to come to Southeast Asia, might be a risk. On the SME side, there is risk aversion, maybe because the sales case to convert these SMEs to use new solutions might be harder than on the pure consumer play side. But ultimately, I think the degree of localization necessary for the SME play is still significant. So the willingness to fund here is bigger than on the enterprise side because entry barriers are higher because the degree of localization is just bigger.
And do you also think it's a function of TAM? I mean, on the enterprise side, you just don't have enough spending, and so the total addressable market seems to be lower. SMEs and MVs, we were looking at a data with regards to software spending in China. In China became the second largest economy, by basically on the back of pirated Excel sheets, because the software spending in China is $20 billion compared to $200 billion in the US, and the size of Chinese economy is, it's still lower than the US, but not as much different.
Well, I think when observing China and the US market, certainly, the amount of software spending among the enterprise side is significant, whereas here it's still low, but I think it all depends on the maturity of the ecosystem overall. So the education processes for enterprises, especially very, very local enterprises, it still needs to happen. It's just very early to see how significant software spending on the enterprise side will really be going forward, and this is also, from a funding perspective, this area is still quite insignificant yet for the regional ecosystem.
Maybe I think going back to your first question about the risk aversion for investors in the region. I think, yes, with some exceptions, investors are risk adverse. I mean, everyone obviously wants to make money, but I think just as importantly, investors are also very cautious about losing money, right? It is risky, obviously, in tech, but I think, in general, we as investors want to minimize that risk as much as possible by finding the right teams, the right markets, the right business models. And so if there's a unproven business model, hasn't been done anywhere else in the world, it's very difficult to have that conviction, right? Unless you really understand that specific market need, because you haven't seen it work anywhere else before. And even for, I think depending on what type of investment decision, how the investment decision is being made. For example, for us at Burda, our investment committee is in Germany, so that's another layer that you have to cross in terms of not only convincing like us in the local side, but also our IC in Germany that this kind of unknown, unproven solution is the right fit for this local market. I think there's a lot of times a lot of barriers to kind of seeing that through. I think as we were just discussing earlier, as entrepreneurs start to get bigger, hopefully bigger and better exits in this region, people will buy that kind of credibility to be able to take these types of ideas that they may have and to get the backing for it. Because right now, I think, again, with some exceptions, most of the entrepreneurs here are relatively unproven, at least in terms of generating return for investors. So you've seen in China, you've seen in the US, guys who are successful at exiting the first time, they won't have any lack of availability for capital for the next idea, whatever, basically no matter what it is.
But I think also it's also a matter of what stage, right? I mean, if you look at the three big guys or the four big guys that are now in Southeast Asia, they also started with something very, very localized, where maybe, for example, in the transportation business, in the development countries, it started with cars, and here started with motorcycles, right? So, and then moved to other sectors and to payments, etc. So I think at the growth stage, people actually don't care too much. Again, is this like a best proven or not? As long as the traction is like really, really great, right? At the early stage, of course, if you're just betting on a team that just bringing some PowerPoints, then okay, what kind of ideas? It's easier to grasp if it's something that has been proven somewhere else.
Got it. Thank you. So I guess just to summarize, the issue is, till the time there are big bang exits, or till the time investors make money, and entrepreneurs prove that they can provide good returns to investors, it's hard for investors to give them capital for something new and wacky. And if they don't have, sort of funding for some new and wacky ideas, then you go back to, similar sort of old school models, an Alibaba of a certain country, or a Square of certain country, or or a Uber of certain country. But ultimately, it's harder, at least in the current form, for entrepreneurs to get funding for a completely new idea today. Is that a fair characterization?
Yeah, I think so. And again, I think this ecosystem, as we've all seen, has changed very quickly in the past 12 to 24 months. So I think it's going to continue to be that way. And I think maybe 1 or 2 years, if we have this discussion again, we may see some of these really crazy ideas being funded. But I think it's it's a natural evolution for what's going on in this region right now.
You mentioned something about exit earlier. Obviously exit plays a huge role in terms of establishing credibility. When you invest in a particular company, what is your base case for exit? Is it M&A or an IPO?
M&A.
M&A.
I think in this region, it's going to be very hard to find investors that have for the most part, right? And again, I think with Catch Up, maybe a slightly different story. But I think just the fact that there are not many options to IPO from this region, is very difficult to have that as your base thesis.
For us, we obviously we also think that M&A would be the most driver, but we still believe that now as there's a big IPO going to be prepared, probably some of you know, and I think after that this is going to be similar to China. I mean, if you look at 2006, I believe Indonesia, Southeast Asia is a little bit behind of Europe and China. And if you maybe look at 2006, maybe there's not too many tech IPOs, right? But now suddenly after Alibaba IPO and then in 2009 and 2012, like exploded enough IPOs. I believe now, since there are some regional IPOs happening in the near future, or at least going to be prepared, if that's successful, that's going to trigger a lot more IPOs in this region. So we hope the best for that to happen.
Yeah, same. I mean, I can just second that. Especially, would like to stress the last point specifically in Indonesia context, yeah, which is kind of like the case of too big to be acquired, yeah. Looking at a Gojek that just raised, 1.2 billion from the likes of Tencent at a tremendous valuation. The potential acquirers of such big companies are very limited, right? So, if such a company at that scale were to be able to IPO at a stock exchange with significant market cap, that would be a very, very great validation of markets per se. So this is something that we look forward to. But a slight addition, M&A clearly for us as well, likely to be coming out of China, the likes of Ant Financial having raised 4.5 billion recently to be acquiring interesting models in fintech and emerging markets. And this is something that we expect to see across different verticals from different Chinese players having more of an international mindset, and that in terms of acquisitions of local players.
And do you see sort of public market perception changing in, or tech companies getting listed in some of these local countries? Gojek getting listed in Indonesia versus the US, or Tokopedia getting listed in Indonesia versus the US, or VNG getting listed in Vietnam, versus offshore. Do you see when the wave of listings would come, will there be local listings, or will there be US listings primarily?
I think it's depending on the preparation of the country itself, right? Probably some countries are more advanced in this, especially like for the startup ecosystem, right? So obviously it would be the decision of the company itself, but I believe in readiness. Probably some countries have not the readiness to provide those kind of IPOs in this country. So I believe probably more regional, if not international, kind of locations.
Great. I guess we're running out of time, but one more question that I think will help a number of prospective companies out here would be if you can share your philosophy on how you value companies at an early stage, whether seed or Series A, versus slightly later stage, which is B, C, or even further. Any pointers, any specific thoughts that you might have might be helpful for a number of companies out here.
Yeah, so just as a context, we at Global Founders Capital, we're a life cycle investor, do seed, pre-A, Series A, and usually follow up until pre-IPO. Tickets that we provide between 100K to 2 million. And given that we invest so early stage, I'd like to highlight, hey, there's a correlation between the tangibility of metrics we look at and the maturity of the business, i.e. the earlier the business, the more intangible certain factors are. Team plays a key role in early stage investment, market that you play in plays a key role in making the investment, and also kind of the provenness of the model per se. We were talking about this before, and we have at this stage a maturity of the markets still a kind of risk aversion, so we'd like to see a big peer model in China or the US as well.
Sure. I think as someone who's looking more at growth stage, Series B and beyond, definitely there is a lot more KPI, a lot more metrics that we can evaluate. And so, I think the two sets of comps that we use, one is public, of course, based on, let's say, in e-commerce, what e-commerce companies, ideally in a similar sector, in a similar business model are trading at, and then also private comps, because I think at Burda we are investing in the U.S., we're investing in Europe, we're investing here in Asia, and so we do have I would say a more diverse set of private companies within our portfolio that we can use to evaluate. And so, I think especially given that most of these companies, even at Series B and C, are not profitable. You're looking at revenue multiples, you're looking at GMV multiples. You're looking at I guess, slightly more top-line metrics, but then you're looking also at the underlying unit economics behind that and understanding what type of drivers do they need to put in place to increase margins and to eventually get to profitability. And so it's again, as with every evaluation, it's always a mix of art and science. But I think we're sort of that in-between stage between PE, which is really much more quant-driven, and kind of early stage, which is going to be much more qualitatively driven, just based on the maturity of the company.
I wanted to add, agree, there's many ways of valuation, but my message here, I think, is don't think too much about valuation. I actually think about more of your product, think about the team, the best team, think about the best partners to partner, grow as fast as possible with the right partners that are willing to support you, and in good times and bad times. I think that's the most important thing. And I think it's now also time for us, especially in Southeast Asia, to join forces. It's not this like, hey, I want to own 100% of what I'm doing, and let's speed up, because we really have limited time. If you look at now, the bigger companies now, international players are already taking control of those companies, or a big part of it. I don't mind of that, but I think we don't have too much time. So I rather us talking about valuation, hey, let's just collaborate, do this together, and make something meaningful in this region. Otherwise, we will lose it.
So one follow-up question on that. So what is more important for you as an investor, growth or margins?
Growth and margins.
I guess at an early stage, the question is that, given that the markets are early, given that the ecosystems are early, most of the early stage companies don't end up making margins. So, when you say go out and grow as fast as possible, that also means burn as much as possible. So is that something you fundamentally condone? Is that something you fundamentally, sort of?
So we're quite risk averse, actually. So we actually started with investment where the gross margin is like 70-80%. So to be honest, we are probably the wrong investors if we should back the burning money. I don't think that's I don't think it's time anymore, right? So I think even more the later on investors, they're really looking at the unit economics. They're looking at all the metrics. And if this continuous burning, there will be one out of 100 that do that kind of thing. But I think the majority of companies that will also get funding is more the ones that have a healthy approach. I think this burning money approach was 2014, 2015. I don't know if it works anymore.
Yeah, adding upon that, when you look at Indonesia and what I think many investors and also entrepreneurs at the same time have learned that, okay, I might be growing a lot, my burn rate might be significant because the market itself, the demographics are so sexy from top down, yeah? But for many of these businesses that have been growing, the total market size and the total addressable market size have been quite different, yeah? So the question is, do I grow smart or do I grow stupid, yeah? And then you have to, of course, look at your cohorts of this growth that you're getting, and for many, the question of do these customers come back that I'm actually acquiring was able to be answered with no. And I think this kind of learning process has been somewhat kicking in, and everyone has been getting smarter in terms of growth and margins and so forth.
And if you want to do those kind of burning, right, I think you need to, now for especially, you need to bring a really, really good story that you will change, how you're going to change it in the future to be not burning, right? So become like a sustainable, a profitable business. So I think in some of the cases that now are like really sizable business, they sold the story of, okay, what happened in China back then, etc. But this kind of stories will be less and less, right?
So sustainable growth is the key mantra.
For us, especially.
If the growth doesn't work at a unit economics level, then it'll be hard to prove and believe in that growth. So it needs to work at a unit economics level, and then I think investors are a little bit more forgiving when it comes to customer acquisition cost, but the business model should make sense at a unit economics level. I guess my last question, which I'm sure a lot of people here would like to know, is this a good market or a bad market to raise money as an entrepreneur?
I mean, assuming, I'm not sure what stage you're referring to, but I think in general, yeah, I think it's a really good market to be raising money because there's a lot of capital that's looking, especially early stage, there's a lot of capital that's looking to be deployed. No, I mean, just read the funding announcements. There's a lot of funds that have been raised looking to target Southeast Asia, Indonesia, Malaysia, etc. And so I think all of us were amongst investors. The typical theme is there haven't been enough companies that I've found to back, and there's a lot of reasons why maybe it's not the right fit for that particular investor. But I think in general there's enough capital, especially at the early stages right now. So I think it's a great time to be an entrepreneur.
I mean, just yesterday, there were like several Chinese investors that visited our office, and they said, "Wow, you're so lucky in this market," right? And this is coming from a Chinese guy, right? The Chinese guys. So we should be more believing ourselves. We are sitting on a really gold mine, a really great market, but we need to work hard. We need to collaborate. We need to be reasonable. We need to think sustainable and long term, and I think then we will create value and we'll have tons of money backing us.
Great. Any further points from you?
No, I think I could just fully agree with Sebastian and what Albert have said. It's a great time to raise money, and comparing to China, it's not like I'm going to be raising money, it's going to be going in the news, and the next 2 months later there's going to be 15 guys copying and doing the same. Yeah. It's not really this kind of. Yeah, yeah. It's kind of the degree of competitiveness or like really bloodbath that is most often observed across many models. I'm kind of referring to the bike sharing space here in China. Is not that visible yet in Southeast Asia. Thus, highlighting the collaborative environment among entrepreneurs, among VCs, and ultimately trying to make the best outcome here for the region, which is supporting great teams with a fantastic idea in exciting markets.
Great. Thank you very much, guys. I really appreciate your time and your thoughts. And I'm sure you gave a lot of good points to our young entrepreneurs to chew upon. And these guys all have money, and we are in a good market. So please feel free to reach out to them as soon as this panel is over. Thank you very much.